Part 2. I wanted to talk to you more specifically about business lending. A lot of people are probably scratching their heads right now as they're looking at this video, trying to figure out, what in the heck is business lending? You know what? Honestly, when I thought about it, when I heard it, I was like, I don't know if I can ever sell this to somebody. But it's not even a thing that I sell. Truthfully, what it is a way to help you grow your business. A lot of the times when we start a business, what happens is we go and we invest our money, or we pull in partners, or we pull in family members, and we pool those resources, or we go get a loan from the bank. Now that loan has come to maturity, we've paid it off, or we're probably about halfway into it, and we need to grow. That growth word comes in a lot. So now the growth of our business has to be monetized, has to be financed. We have to figure out a way. So what better way than your business and figuring out a solution to getting you the money that you need to grow your business, or to create the infrastructure that you need in order to grow your business. So how does business financing work? We have several plans. We have several programs for this. I'll talk about one in particular that I think is a really easy one to get into, but then we'll kind of tap on one other one that explains a little bit more of the details of how, the who, the what, the when, and the where. Program that we do is called a merchant cash advance. So generally what happens is your merchant account with your company or your business has receipts, weekly, daily, monthly. What our lenders do is they take a look at those merchant transactions, and they identify how much we can actually loan you in order to create the infrastructure that you need, or to get the cash flow that you need in order to continue to grow your business. Whether it be for more equipment, whether it be for updating your marketing plan, whether it be for uniforms for the staff, or just having a refurbishing some of the current or just refurbishing some of the current furniture. We can find a way, whether it's a restaurant or a hotel or anything, to get you there. The second part of business financing is a line of credit, a business line of credit. And a business line of credit, normally we need about 2 years of financials for the business itself, and you need about a 580 to a 620 credit score, sometimes a 680 depending on the actual interest rate. But I can give you more details on that in a one-on-one conversation. So those are the two items. Those are the two specifics of business loan. Okay, now we're gonna get over to the cool stuff. All that stuff is cool. But here we go. Talking about the great things that we do with creative financing. We do when it comes down to commercial real estate. So we do fix and flip loans. We do straight loans, which are on terms of 10, 15, 20, 25, sometimes 30-year terms. Those are traditional loans. We work with 4 different types of banks. We work with private banks, we work with hedge funds, we work with traditional banks, credit unions, and we even work with hard money lenders and investment groups. Because everybody's situation is different. Some people may not have the credit, but have the income. Some people may have the credit, but may not have the income. Generally, all of our loan products require some increment of deposit or security. We do have secured and unsecured loans. We do SBA 7A loans, but I'll get to that in a little bit. So let's talk about fix and flip. Fix and flip loans are pretty much the type of loan that you want to get into when you have a property or 2 or 3 or 4 or an apartment complex or anything commercial, and you get it for a really good rate. Now you're in the sales process. Now you've gotten a sales agreement on the property or a letter of intent. What do? Well, you talk to me. We take that letter of intent, we take your application with your 3 bureau credit scores, and we submit that information to our lenders. Once we submit that information, we have a conversation. Normally within 24 to 48 hours, we get a response. With that response, what happens next is solely up to you. Our lenders will pre-qualify you and let me know how many different programs you qualify for and what those programs look like, what those interest rates look like at a cursory glance. It's not in concrete yet. It's innate though. So once we get that, now you can start planning. All right, let's go and scale out, spec out all of your renovation cost and what that renovation cost looks like. Let's get your down payment money or your security deposits down for closing. Let's try to have all those conversations quick, fast, and in a hurry so that we can get you ready to close. Generally, we can close within about 15 days. So once you're ready, we're ready. Simple as that. So the fix and flip component is a 12 to 18 months, sometimes 24 month, or at the longest, loan product program. That money's pretty hard. We call it hard money, but it's more private equity. So that money is going to be at a little bit higher of a percentage rate, but we negotiate the terms of whether or not there's a penalty for repayment. Because remember, you're trying to renovate this property. You're trying to use the cash that you have and the cash that you can get off of the loan to fix this property up as quick as humanly possible and rush it back to market as fast as you can. So now you're not only creating a vacuum, but you're also creating a hedge or a difference of what based on the fair market sale prices are. You sell about 15 to 20 grand under fair market. You put about 15 grand in it. Wait a minute, I got really complex. So I'm gonna do some really simple math. I've been told that I get really excited about numbers, and I tend to. But I wanna make sure that you understand and that you can follow along with me. So I'm gonna do it along with you. Okay. So, let's say your purchase price for the fix and flip property is $100,000. Let's say we're able to get you into a 80%, 80-10, which is an 80% 80% finance deal, and that leaves 20% left for you to pay as a down payment and with closing costs. So 20%. So that's $20,000. You follow me so far? All right. I'm gonna let you catch up. 1, 2. I'm just joking. All right. So that $20,000 has to go towards the closing. All right. We're in there. Things are going good. Now we have the flip component, which is about a 65 loan to value. So 65%, we can lend up to 65% of that 80,000 that you borrowed against. Let's just say you need about 15. So we're going to say $15,000. So you put 20 into it, you borrowed 15. So that means your current amount that you need to at least make up is about $35,000 to break even. You still with me? All right. This is where the fun part comes in. Hypothetically speaking, your current fair market value for the house that you just renovated and preparing to put back on the market, let's call it $180,000. That's what the average is. Let's put the property out there with the initial sale price about $10,000 below that fair market value at $170,000. Okay? So that means you have $80,000 in a loan plus $20,000 that you borrow that you put as a down payment plus $15,000 that you borrowed as money that you needed in order to do the renovation. You with me so far? So that total amount is $115,000. Let's say the house sells for $165,000. Somebody makes you an offer and you say, I'll take it for $165,000. You with me so far? All right. So your total amount that you spent and that you've invested in the property maybe with a little bit of interest. Let's call that a nice round $120,000, $5,000 of interest that you paid on a higher interest loan for about, let's call it 18-month term. A term is a length of time in which you're financing this particular property. So $125,000 is your current debt that you got to pay off. You get an offer for $165,000. You make, after expenses, $40,000. Fix and flip, voila. All right, so fix and flip. Sounds a little confusing, there's a lot going on, but truth be told, it happens every day. Fix and flips are the bread and butter of the industry, of the real estate investing industry. People purchase properties, investment properties all the time. I even know people that do that purchase and flip hotels. I'm talking to a client right now who's doing a hotel flip deal right now. Yeah, really happening.